Okay, everyone. So today I'm going to be giving a lesson, and it's going to be valuable for you guys, and you can implement it. And it's on something very basic, but the right way to do it. And you're not going to find this on the internet either. So, well, now you will. So it's something that most folks use, but they use it haphazardly. It's trend lines. And how to use trend lines to actually put on trades. All right. Now you're going to see a lot of stuff out there that talks about trend lines, but just doesn't work. So I'll show you how to use it in a Wyckoff approach, but very, very specific, and it works. I mean, that's about it. So the idea is really simple, right? First of all, you always have a higher time frame and a lower time frame. So you have, for example, your higher time frame and your lower time frame, right? Use trend lines to buy pullbacks. All right, so we use trend lines on lower time frames to buy pullbacks, to buy higher time frame pullbacks. Okay, so I'm going, this is the topic here. All right, how to use trend lines on lower time frame to buy higher time frame pullbacks. Did I do this right? How to day trade using trend lines on lower time frames. Something like that, all right? And so here's what not to do. Not to do is draw trend lines all over the place. I see you see a daily chart or this chart, and you're just drawing trend lines all over the place. That's totally pointless. It's totally useless. It's totally pointless. All right, so that's not what you want to do. What you're trying to do is trade. And the way that's done, I'm going to explain this to you. Higher time frame and a lower time frame. So let's say the market pulls back, right? You want to get this entry. Okay? This leg is your pullback. All right? And believe me, like, I used to not like trend lines at all, but when I figured out the correct way to do them, I saw that they're very, very valuable. Very valuable. And this is coming from someone, I never liked trend lines. I thought they were stupid, but it turns out that they have an application, and I'm going to explain that. All right, you see this leg right here? Let me just draw it. All right, this leg right here. right? This pullback leg is equal to the lower time frame trend. Again, the pullback leg equals lower time frame trend. So this move that's a pullback on a high time frame looks like a lower time frame downtrend. Okay, so pullback equal. All right. So as you can see, there's a pullback. It becomes a lower time frame downtrend. So what you want to do is on this pullback, on the lower time frame, draw your trend line. Okay. So the high time frame is pulling back with trend, right? So it's so let's say it's, there's a moving average. So now, it's pulling back on the lower time frame, not on the high time frame, but on the lower time frame, draw your trend line. Why? Because the trend lines they help emphasize a change of behavior. They help emphasize a change of behavior. They help illustrate a change of behavior. Right? On lower time frames. All right, so here's what you, very practically, let's say right now, you're trading, I don't know, a 4-hour or a daily or whatever chart, right? You want to buy the pullback. Go to your lower time frame and draw the trend line. Now there's a couple of things to this. These are the mistakes that are made. First, I'm gonna indicate that what you need to do. To use trend lines, use tick charts. To use trend lines for lower time frame entry, use tick charts like like 500 tick. I forgot this, 1500 tick, stuff like that, depending on the market. All right. So again, to use trend lines for lower time frame entry, use tick charts, not time-based charts. All right. Do not use 5-minute charts. This is a little hint, but the time element screws it up. All right. If you use 5-minute charts or whatever for intraday trading, use tick charts. If you're going to use trend lines, because 5-minute charts and these other various charts, they just mess up the trend channel because of the time element and because of the volatility, so that time element messes things up. What you need to do is get rid of the time element by using the tick charts. Tick charts show trend better. All right. So how do day trade using trend lines on lower time frame to buy high time frame pullbacks? look at a market you want to trade. Let's say this is the ES. You have your higher time frame. It's pulling back. It's bullish. You want in, right? You want in. And it's pulling back. So you immediately frame the pullback. You frame the pullback using a lower time frame tick based chart, and you draw the trend lines. And I'm not going to go how to draw trend lines. It's really basic. You know, anybody knows how to do it. There's no magic to this. It's just point to point draw. All right. And you don't have to be a magician. Just draw the trend lines. You know how to do it already. You don't need someone telling you, you know, 2 points or 3 points. You're just encapsulating movement, and it's really straightforward. Okay, so and the change of behavior will be very, very obvious. So here you'll get your change of behavior signal telling you that this turning point is done. This turning point is happening, and it'll show it to you. Okay. Now, why am I showing you guys this? Is because what you don't want to do is frame every single trend and draw multiple trend lines, because it's not going to help you. I've seen diagrams that they're ridiculous. They have a trend line AA, BB, CC all over the place, but that is an error. You want to use trend line very specifically to find changes of behavior on lower time frame charts in order to buy higher time frame pullbacks. The first thing is you want to pick the market that's pulling back that you want to buy or sell. Second step, get a tick based chart and draw the trend line on it. Third step is wait for a change of behavior to tell you to start getting ready to buy that lower time frame pullback. All right, now there's a couple of things you want to notice in the, you know, before that change of behavior. There's a lot of things that happen typically before the change of behavior. To help you kind of anticipate it, you're going to look for shortening of the thrust as well as overbought, oversold conditions, meaning either the thrust is shortening, which is typically what happens, or it's a, you know, it gets overbought, oversold. All right, and the let me write this down. All right. Look for SOT or overbought, oversold, followed by a change of behavior. All right. After the change of behavior, you obviously execute, you know, the entry, your entry approach. I'm not going into entry approaches right now, but that's what you do. All right. So you look for shortening of thrust or overbought, oversold, followed by a change of behavior. The key is looking for the change of behavior. It will be overemphasized by the you know, by the trend change and the trend channel. All right, so use trend lines on low. Wait a second. Yeah, tick charts. You want to use tick charts, and you're using it to buy the you know, trade the pullback. So it pulls back. You see the change of behavior, and there was something else, but I forgot. All right, I think that's about it. All right, so you want to focus on this leg, for example, on a high time frame. Frame it on a tick chart, lower time frame, tick, you know, and look for the change of behavior. Before that, shortening the thrust, and the other thing, you know, overbought, oversold. Oh, and the third thing, yeah, now I remember. as the pullback approaches support resistance, that's when it gets interesting. All right, so you don't want to just haphazardly buy a little pullback and it looks like it's a change of behavior up here. That's incorrect. All right, so this is a way of this is part of buying the support and resistance levels. As the pullback approaches higher time frame support resistance levels, it could be in a spring position or up thrust position, doesn't matter, but it should be around support resistance. Again, the pullback needs to be around support resistance. Like right here is around support resistance. It could have sprung it. It could have gone a little lower and did a spring. That's fine as well. But it needs to be around this level. All right? It needs to be around this level. Why? Because smart money doesn't buy haphazardly. These things are planned with reference to prior points, liquidity grabs and springs and up thrusts and all that. So these are some 3 guidelines, and that's all I got. So try it out, and if you don't think Trendlines work and all that, just try it. And most likely, if you've experienced in the past that it didn't work, it's because you're using time-based intraday, time-based charts. On time-based charts, it messes up the trend, so you can't really frame it. So try it with Tick. All right, take care, bye.